Good morning, good afternoon, even good evening for some. This is Sarang Sambari here from Syncron. Welcome to our LinkedIn Live, where today we're going to be talking about the evolution of service and the role that service contracts play in adding value and growth to your business. Really excited for the session today. We have a great group that we'll introduce in just a minute. Just a couple of housekeeping things. If you do have any questions or comments, please go ahead and put those into the chat. We'll try to flash them up on the page here so the group can see it, and we'll try to address them live on our session today. And if we can't, we'll absolutely follow up with you. But let's get into it, guys. Maybe we can start out with some introductions of the group. Justin, do you want to start off?
Sure. Hey, everyone. Justin Konopask here, Director of Industry Solutions at Syncron. Really excited to have this conversation. We got a special guest here, Aly Pinder from IDC, who authored an analyst brief on this topic here. We've had several discussions in the past on this with him. As this topic keeps coming up more and more, this concept around servitization. So excited to dive into it and start peeling back some of these layers.
And Aly, if you want to do an intro.
Sure. Thanks, Sarang. Thanks, Justin. Thanks for having me today. My name is Aly Pinder. I'm a research vice president for IDC's Aftermarket Services Strategies research organization. I love the topic of service. I'm really passionate about the ways in which service can really drive at differentiation and value within customer relationships. So I'm looking forward to today's LinkedIn Live.
Yeah, appreciate it, guys. Definitely a big, complex topic to start out the day with. But we'll see what we can get through. Guys, I got to tell you, look, before we jump into a little bit of the discussion, I got a funny story to tell you about just service contracts in general. I remember I was working with a customer, and this was years ago. And look, I'm not going to mention the customer name or the vertical or anything like that, but at the time we were working with them on their service contracts, and they were having some problems with their entitlement process. So we went on site and we did sort of a shadowing session to understand, how are they building service contracts? When they create work orders, how are they looking at entitlements? And I remember shadowing someone, and this was like a service coordinator, and they were responsible for creating work orders. And I asked them a simple question. I said, look, when you create this work order, how do you know that this job is covered under a service contract, or this type of job is covered under the service contract? And the lady who I was shadowing, she said, look, I know all of my customers, so I know what's covered, what's not covered. And I said, yeah, that's awesome. But what if somebody new was coming into this role? What would they do? And she said, come on, follow me, Sarang. And we walked down the hallway. We walked into another room with a number of filing cabinets. And she opened up one of the filing cabinets. She said, okay, here's the customer. Here's their service contract. Literally handed me a PDF. And she's like, you can read through this and you can figure out what's covered and what's not covered. And I was just shocked. I was like, wow, that's how the entitlement process is going to work. We're definitely going to get a deal here because we can improve that quite a bit. And it's interesting. Look, I think there were all sorts of challenges with service contracts back in the day and just structuring them and trying to figure out what's covered so you don't have tons of leakage. And now, there's all sorts of new things happening with service contracts. And I think they're bringing tons of new opportunity, but they're bringing their own sets of challenges. And so, guys, to kick it off, help me understand what's actually changing in the service space, which is putting so much focus on service contracts, and why do more service organizations feel like, this can be a profit powerhouse for them?
Yeah, I'll go ahead and jump in there, not to jump over you, Justin, but that analogy and that example brings up, I think, three key points as to what is evolving within the service world. And I think first and foremost, whether you're in a B2B environment, which is the example you gave, or a B2B2C environment where you're working through dealers and third-party service providers, the customer expectations have evolved, right? Customers continue to want more, better, faster, improved quality. If you're walking down that hall to look in that file folder to pull up that PDF or that paper form, that's time, right? And that's time that the customer is not being served. That's time that resolution hasn't occurred. And our expectations are that service and resolution will happen at the speed in which we expect it to happen in our real everyday life, right? Instantaneous. Another thing is organizations, service businesses have realized they need to align with their customers, right? Their customer goals. It's no longer an aftermarket activity where service is being done at the speed of the service provider. It needs to be done in alignment with the productivity goals of the customer. So if you can't align with those goals of that customer, you're really going to struggle with having that differentiation and value proposition. I think the third point, and I'll pass it on to Justin for his perspective, is, the world we live in is much more connected today. We're no longer expecting that a PDF is going to be searched line by line, page by page, or a Word document or a paper file, right? We're expecting a level of connectivity that drives insight on demand. So I shouldn't have to search for information. I shouldn't have to search for that customer contract. I should know within my mobile app or within whatever device I'm using the right information to ensure I'm delivering the right level of service to a customer. And that level of connectivity, integration, and insights on demand is where we're seeing the market evolve.
Yeah, and actually, Justin, before you jump in, just a comment on that. I think it even goes a step beyond that, where not only do you not want to have to go out and pull up a PDF document of a contract, but this is a great gateway into building a better relationship with your customer. Right now, you have if you have all this information in front of you, now it's much easier to have a discussion on, well, there's other service contracts, there's other offerings, there's other things that we're doing. Have you thought about some of these sorts of things?
Yeah, it's alignment with the goals of your customer, right? So if you're having it's a conversation, it's a partnership, right? If you have that information on where you are currently today, and I walk into your business, I can see opportunity, and I think that aligns with that customer expectation evolution. So customers expect you to want to work with them to improve their business. They also expect you to know their business, right? It shouldn't be that I'm coming onto this for the first time with new eyes, right? I should be embedded in this partnership relationship across their life cycle. And I think that also is evolving.
Yeah, and I'll jump in here a little bit with a story to start out. I agree, Aly, everything you said was spot on. For me, service contracts really took a pivotal turn pretty early on, actually, in my career from a personal perspective, just because I ended up buying a used car, and the brand I was a little hesitant on just because I wasn't 100% sure about the lifetime, quality and maintenance that would be associated with it. It was kind of taking a step out of my box of comfort, if you will, trying a different car brand. So I did buy an extended service contract with it. And I'll say the experience actually changed my perspective on how contracts work, because all the time when I went to a car dealer, they try to upsell you a service contract. I figured they're just trying to gouge me. They're going to nickel and dime me in all these situations. But, the transparency was there up front. It wasn't necessarily that, bumper to bumper or powertrain warranty where you kind of got to read the fine print and what's covered versus not covered. It was very black and white for me. And then additionally, the experience that I had, I had SLAs essentially for like loaner cars as well. It was like I dropped my car off. I knew exactly what was covered. It was very transparent. There was no gray area in that perspective. I come in, I pay, I think it was like $100 for whatever the repair was, no matter what. And the service contract covered everything else. I had the loaner car for as long as I needed it for. And so I think going back to what you were saying, the expectations of the customer are evolving with technology, because this was all done electronically. I had it on my phone. I had an app that I was able to log into at any point in time to see, is this covered? Is it not covered? Because at the end of the day, understanding what was covered and not covered also dictated where I brought my car for maintenance, because that would change the cost out of my pocket. That would change the expected turnaround time for the maintenance that I would be receiving for that asset. When would I get it back up and running? So, as you said, the expectations of customers are changing. I always point to cell phones as one of those things that's constantly evolved us as society, more or less. And, I can't say the name too loud, but let's just say there's an Amazon product right next to me that I can ask any question and it will resolve it pretty quickly for the most part. But at the end of the day, these technologies, that is becoming the expectation, the norm. And so as companies start thinking outside the box with respect to how to differentiate their service organization, that customer experience, making that a really competitive advantage, that instant service or that instant resolution, or let's say instant collaboration and engagement. Maybe that's the best way to put it, because I knew they couldn't fix my car within 5 or 10 minutes. Like, I can find something on my phone, but there wasn't any hesitation in the steps that they had to take in order to send me on my way with my loaner car. They knew exactly who I was, what I was entitled to, and I had that car. I was off and running without a beat missed in the day. So.
Yeah, I'm curious though. Like both of you brought up the point of customer expectations and being able to differentiate by building a sort of a value added partnership with your customer. But look, I'm going to play devil's advocate for just a moment here. If you just continue trying to meet and exceed customer expectations before your business is actually ready for new sort of service models, or ready for some of the changes that need to occur, I mean, I feel like that can be a big negative impact on your organization. So, and because even when you think about it now, as more organizations are looking at how do I build an outcome-based sort of service model and a service plan to go along with it, or how do I develop a usage-based service contract? It was interesting. Justin and I were in Las Vegas the other week at one of these big construction expos, and Justin was in one of these sessions. I remember you were telling me about it, where this company was essentially buying construction equipment from the end customer, and then they created sort of a usage-based model and was selling that equipment back to them. So absolutely, I think across the board, so many industries are going down this path. But I'm wondering, like, as you guys have worked with different customers, what do you need to think about? What does the business need to think about before going down this path? And does it make sense for every company to start building these sorts of models?
Yeah, I would echo the conversation of the complexity of this shift, right? It's not something that you can turn a switch on and just get there. I've been covering this space roughly for now 15 years. So I don't want to date myself too much, but you can tell by the lack of hair up top that, I've seen some change. And the big shift is, can an organization have the data and insights to make the shift would be one. You need to be able to know Justin, the customer, before they walk in the door. I need to know, can I pull up that information to know what I should be offering them? Am I giving something away for free if I don't know that Justin has this entitlement contract, or that Sarang has this level of service that I should be offering? Am I showing up and a technician is just doing everything because they want to be the hero on the day, as opposed to, what is right based on that contract? The other piece is, are you within a profit center or a cost center, right? I mean, I think this is, foundational when you think about the shift. That construction company or selling, buying equipment, are they really expected to drive profitability? Which makes a huge shift on how you're, establishing a service contract with a customer. And I think that piece, we still find that about 50% of organizations are going to be managed as a cost center. Those businesses aren't going to evolve to servization tomorrow, right? They need to shift their entire culture around what service means, how it will drive value to customers. And the third piece is, as you think about, outcome-based models or servitization, it really takes customer education and customer buy-in. The customer needs to know what they are signing up for. I use the example all the time of, I was talking with a leader of field service a couple years back, and they said, what their customer really valued was seeing that white van or white truck show up, and that person with the hard hat show up, twice a year, have donuts, walk through the facility, answer questions that are outside of the work order. If the customer expects that level of service, that's not going to provide you with the outcomes that you're expecting from a servitization model, which is, uptime, which is, that we're adding productivity. And so you need to align your customer behavior, customer buy-in to what servitization looks like. If they're expecting to see that van twice a year on those moments or once a quarter, that's a different model than thinking about selling an outcome-based service contract. And so I think aligning those three areas is really what challenges businesses as they think about the shift.
Yeah, Alec, two things just to pull on a little bit further. You made a great point around how 50% of organizations today are still being run as a cost center. Like, do you see most of those organizations making a transition, or do you think some just feel, look, this is how our business is running, and it allows us overall to be run profitably? So, like, is it? Do they have to make the shift, or is it okay for them to stay like that?
Yeah, and maybe you're asking an analyst to dive deeper into the layers of that onion, right, of that data.
Sure.
So that the sample size is over 800, manufacturers or service businesses, and I want to say about a little over 35% were process manufacturers. And so those are businesses that historically have thought about service and maintenance on their own stuff, as opposed to they're selling things to a customer and servicing that customer. So I would say of that, 50% that are cost centers, about a quarter, or excuse me, about half of that 50%, so a quarter of the overall sample, are looking at shifting to a profit-centric view. And by and large, if I think about the wider lens of that 50% of companies, half of them were discrete manufacturers as opposed to process manufacturers. So I think the shift really comes when you think about more discrete manufacturing as opposed to process manufacturers who historically have thought about owner operator models or maintenance on their own equipment, and they're not selling service to anyone else, and so it's not going to be a profit center for those businesses, and those companies aren't going to make that shift.
Do you also see organizations putting in a lot of effort and time into just even enabling their teams to talk about these new sorts of service models? I went to that field service medical show, the WBR show, a couple weeks ago, and it was interesting where everyone was talking about new service models. They were talking about service growth, and it seemed like the conversation had shifted away from let's figure out how to improve first time fix rates, and let's figure out how to enable our teams to talk about new offerings. Do you see a lot of effort going into that?
Yeah, I mean, you said a great word, enable, right? Again, thinking back 15 years, 10 years ago, there was a shift to say technicians should be sellers, direct sellers, and that seemed to fall away pretty quickly when you realize that technicians, their expertise is in solving problems, right? And I would argue they shouldn't be direct sellers, but you should enable them to have the conversation. I think that alignment with the customer, that partnership, they are trusted advisors. They get on site, and the people they're talking to know they can fix the challenge of the day, but that they can think about ways in which overall improvement can occur. And so I would argue that it's about enabling the field service team with the tools and the insights to have the right conversations, and to draw and to provide that insight to other functions within the business that can then do that next upsell or cross sell into an extended level of service or service contract.
Justin, some thoughts on this? I mean, I know you and I had tons of conversations around, what does it make sense for this sort of business and this industry versus, another business, and even looking at some of the financials as well. What's your take?
Yeah, no, this has been a great conversation, just taking in everything, Aly's been saying here. I think the part for me that I always come across in conversations, I feel like service leaders at times, and this I just pick up, Sarang, I'm sure you've experienced this as well as we've, gone out to different conferences. But service leaders, there's almost like an underlying expectation that they switch to that servitization model. Everything is going to blank as a service, product as a service, outcome as a service, uptime as a service, whatever it may be. And I'll say that, equipment as a service, providing that outcome to the end customer, I think that's at the very far end of the maturity curve. We'll say that. So just kind of level setting that expectation there, where you're not going to go from being a cost center to providing equipment as a service overnight. That jump is going to take years. It's going to have many steps in between in terms of your journey on servitization. And I think that's the part where understanding what that journey looks like and how to just take a first step. And it may not be with your entire product line. It may not be with your entire customer base. At least just putting your toe in the water and trying something new, I think obviously it's a business change. Your processes are going to change. Your financials are going to change. There's going to be learnings along the way, but it's at least moving in that direction. And so I think that's the part that I always come across, where every time servitization comes up, not every time, we'll say a lot of the time servitization comes up, it's always jumping to that, end state model. But I think, just starting with extended warranties is a great example. I brought up the, automotive warranty earlier. You have, bumper to bumper or powertrain. I think bumper to bumper standard with cars right now is like 3 years, 36,000 miles. So an extended warranty from that could be, 10 years, 100,000 miles, something along those lines. So coming up with those terms that are digestible for your customer base and for your internal customers and teams is a really good, consideration as you're beginning on this journey. Now, you mentioned something that always piques my interest around financials.
Sure.
So obviously, when you think about a revenue model, jumping to that end state of servitization or providing equipment as a service, I immediately think of SaaS when I think of, blank as a service. SaaS comes with extremely high gross margins when you think about it. 80-85% isn't uncommon from a gross margin perspective. Now, realizing those types of margins, from an equipment perspective is kind of out there, just to say, because it's not software, it's that actual hard asset that has maintenance associated with it. It's a little bit more challenging to maintain. But with this transition as well, and I think this is where there's maybe a push and pull across the organization, where leadership, at times, they may see it from the perspective of, I can increase my margins here. I can grab more market share. I can lock down my customer base for maintenance going forward. I can retain those assets potentially on my balance sheet. I have more moves that I can make down the road with higher margin revenue streams coming in, as opposed to just that initial outright sale of the asset up front. Depending on the organization, the business, or the asset, like you're also not necessarily locked into always having that customer come back to you for maintenance when you sell them that asset. But if there's a maintenance contract stipulating where they must go or the maintenance schedule that they have, now you have a generating, a consistent revenue stream going forward. So all of these factors start coming into play when you look at it from a strategic perspective. But you also need to evaluate the maturity of your business. Again, you can't just jump straight to that. So I think that's where the communication internally and externally needs to come into play, outlining that roadmap of what's going to be our first move, what's going to be our 1 to 3 year plan, where do we want to be in 5 years, and having that charted out really can alleviate some of the burden on this journey, because it is a massive change for an organization going from a cost center to a profit center and then a servitization model. And so I just, that's what comes to mind, Sarang, acknowledging that, A, it may not be for everyone, and B, there's varying levels of maturity, both, where you start as well as, where you end up. There's no reason, if it doesn't make sense for your customer base and for your business, to try to go full, equipment as a service at the end of the day.
Yeah, and look, I 100% agree with you, and I even see some comments coming in about, it's absolutely a journey, and you need to take this one step at a time. But look, I would even go further than that. I don't think it's absolutely a journey, and you need to think about making changes in your organization. But I think a lot of businesses are looking at this, especially at the C level, and they've got to make some tough decisions to say, look, in the future, 3 years from now, 5 years from now, we're going to fundamentally change the way that we're doing business. I'll give you a simple example. Like look at a company that drives a lot of revenue today through their spare parts inventory, right? They're selling components, maybe in like the automotive space, as an example. If you move to something that's more outcome based, then that's going to cannibalize a lot of the revenue that you have from your spare parts inventory. So, Justin, going back to some of your financial comments, it's absolutely a shift in the way that you need to do business. And the organizations that I've seen that have done this the best have made sure that there's alignment from the C-level on down to, the worker level to make sure that this works well.
I would add another analogy to that one, Sarang, around, how companies make money. Again, going back a few years at another trade show that we all know and love around field service, an executive got on stage and said, we actually make money every time we roll a truck. Every single time we roll a truck, regardless of why we roll it, we make money, right? And the message that he was trying to make is, as we make this shift to better align with our customers, deliver value to our customers, and differentiate our business, sometimes we shouldn't roll a truck. Sometimes we need to resolve an issue in a different way. And even though we would make money on sending that technician, that isn't what's best for the customer. And our future level of partnership with our customers means that sometimes we won't need to, or we shouldn't send that truck. We should engage in a different way. And to your point around, consumable sales or, selling, spare parts, sometimes that's not the right position to be in to add value to your customer relationship. And I think that is also what needs to shift, is the mindset from the C-suite that says, these may have been profitable yesterday and a decade ago or 5 years ago, but the way in which we're going to differentiate our business moving forward is better alignment with our customer outcomes. And that is how we're going to be sustainable when we think about profitability and servization and service value. And it may not be what it looked like a decade ago.
And Aly, I would think that, this significantly increases the value of a business, right? Going through this journey, going through all these transitions. It's not just the service contract side. It's moving from a cost center to a profit center. It's shifting and building a servitization sort of model. It's making the move from a hardware company to a technology company. Like all these sorts of shifts that we're seeing happening in businesses. Ultimately, the business is going to have a much higher valuation. I don't know if you had any thoughts on that, or, Justin, I know you do quite a bit of financial analysis on some of these companies. Any thoughts on that? I'll leave you with one other comment before you jump in here. At that construction conference, and I need to go back and look at the numbers in all fairness, but one of the presenters, brought up something. He did an analysis of Walmart and Amazon. And he said, look, Walmart does, 3x the revenue of Amazon, but the market cap of Amazon is 2x of Walmart because they're fundamentally a different sort of company. And I wonder if more businesses are looking at this even from a service standpoint, and it, boosts the valuation of their organization.
Yeah, I'll let Justin deal with the financials, but I'll deal with the shift around digital, right? IDC is known for talking about digital transformation, and we're actually taking a shift in the current, financial economic period that we're in right now to talk less about digital transformation, because that has become somewhat of a catch-all term that, the definition has evolved and become more ambiguous. We're talking about digital business. We're talking about digital resiliency. We're talking about ways in which technology can help in those shifts in markets. So what I think is really interesting about the last 3 months and, the last 2 weeks, we had our conference out in Santa Clara a week and a half ago. And, going into that event, we didn't think we were going to talk about financial markets and banks and things that are impacting day-to-day life, but we had to, right? It was not only in the news, it was impacting organizations and the ways in which they can think about capital. And I think what is really critical for service organizations is to recognize that disruption is around the corner if it hasn't already happened within your business. And you can't think about your organization, whether you've been in business for 5 years, 10 years, or 100 years, that you're guaranteed to be in business next week, right? Things are evolving very quickly, and it's not about thinking about transformation as being this big thing that will take years and years and years to evolve. I do agree with you, Justin. It is a journey, but you need to start today, right? You will be impacted by markets and by adjacent markets to your business and customer expectations. And it's important that businesses think differently than they did before, because the world is evolving rapidly, and if you're not keeping up to date around your digital capabilities, you will be left behind.
Yeah. No, I completely agree, Aly. And I think from a financial perspective, and you brought up something that's, resonates with me quite a bit, is disruption's just right around the corner oftentimes. And I think if anything, the past, several years with the whole pandemic has really highlighted is supply chains can be disrupted very quickly. The buyers or consumers can be disrupted very quickly. So these patterns, I think agility comes to mind with respect to agility, and I'll use the other word, resilience, comes to mind with respect to how these service organizations need to operate and really kind of bolster the resilience of the overall company. I think when I think about it from a valuation perspective, I'm going to use SaaS as a really good example, because SaaS companies historically just have very high multiples when you look at the valuation, and a lot of that comes from when you look at the annual recurring revenue or revenue that's retained on the books going forward. They're locked in for a revenue stream for the next 3 to 5 years. You can go to their investor presentations, and a lot of times you just see, okay, the risk of their revenue dropping below, however many billions of dollars in the next 2 to 3 years is pretty negligible. Like it's not going to happen unless a contract is voided, in which case they're still going to get paid out a certain amount at the end of the day, depending on those stipulations. And so I think it definitely seems appealing when you look at it from that perspective, because when analysts or investors view this, that resilience of your revenue book behind the scenes going forward and, out in the future is something very attractive. It provides that confidence that the company is resilient, that the service organization has the backing of the entire company at the end of the day. I think when COVID-19 really first came out, and all of a sudden you had manufacturers that basically had to come to a complete halt. If it wasn't their facility that was shut down, it was probably somewhere in the supply chain that was shut down, because the global network of the supply chains were so vast. And I'm trying to think of the word, the redundancies in some of the part manufacturers as well in the supply chain wasn't necessarily as robust as it needed to be, given the fact that, no one really expected the entire world to shut down all of a sudden overnight. So these factors kind of come front to mind right now, and it may not play into valuations per se today, but I think it's a consideration going forward. And it's been viewed in a lot of, I'd say, investor calls. A lot of leaders are now taking the approach of onshoring from a supply chain and trying to bolster and really emphasize their service organization and the servitization model going forward, because of the fact it does provide that resiliency in the revenue streams going forward. Now, I'll caveat this as well. Depending on the type of service contract that you have, if it's outcome based, that also requires the end user to be using those assets, which, I'll use airlines as an example. I shouldn't say no one, very few people were flying when the pandemic first started. I think airspace was shut down between Europe and Asia, so only domestic flights, and that was very limited at the end of the day. That was a really good example where if there's a servitization model going forward, Rolls-Royce kind of comes to mind as that, power by the hour. If you're not flying the aircraft, then, what's your revenue stream? Now, there's always that force majeure clause somewhere in the contract, usually for those types of situations. But at the end of the day, that's the other liability you have to balance there. But I do see it as being very sticky. That's the word that comes to mind in terms of revenue streams. And then at the end of the day, as I mentioned earlier, when you do have that contract with the customer, the risk of them selling the asset and going with a different brand or going to a different maintenance provider, that is minimized quite a bit. So Sarang, you brought up the part with, aftermarket parts being a giant revenue stream. Well, if I'm looking for a new part for my car, I might go to the dealer first and say, okay, what are you pricing this part at? And then I might go online, I might call the shop down the street. I'm going to source around because it's a part. I'm not locked into anything. I might go back to the dealer for the next time something breaks. But
Sure.
If you have a service contract set up, then you're guiding that customer back to you at the end of the day in many ways.
Yep.
But Aly, I did want to ask a question actually back to you on something that came to mind when we're talking about the customers and that digital experience. How do you view the role of connectivity in IoT on this journey of servitization? Because I think that's, as a manufacturer, maybe that's a critical area where that starts at the design level of the asset itself. We're thinking about design for serviceability is critical to some of these business models going forward.
Yeah, you drop a lot of future titles of reports I'm going to write, right? I would argue that's the building block, right? That's the foundation. I alluded around the key shifts in the market or challenges around being able to get intelligence off of the asset to be able to deliver a predictive level of support. And I think as you look at the shift to selling an outcome and not selling those 2 to 3 to 4 visits that are going to happen in a programmatic way, you need to know how the asset's performing in real time to make decisions that allow you to predict which resources need to be where, which techs have the right skills to solve a problem. What's the reason I'm sending someone out, to diagnose remotely. I would argue connectivity, the Internet of Things, is critical to that ability. Where I see the challenge is understanding what that actually means. What level of connectivity do you need to have enough information to make a service decision? I don't know if my engineering and kind of PLM and colleague here at IDC might disagree with me because they want everything to be as smart and intelligent as possible in the design and engineering and manufacturing phase, more from a quality perspective of the product. But if you think about what service needs to know the reason for failure, you may not need to know everything, but you need to know what's most likely the reason for degradation of performance or future failure. You're pretty sure that the difference between getting your oil checked every X amount of miles or the fact that my engine light goes on, that sensor is probably accurate unless it's not. And so I think that it's how connected do we need to be fairly confident that this is the reason why performance is lagging, and what can we do? Because you're not going to force your customers, or in a B2B environment, that other business to buy all new stuff all the time. One of the things that came out of the last 3 years is customers have decided, I want to delay new purchases. I want to push my equipment as hard as possible for as long as possible because I don't have, back to the financial markets, I don't have the capital to buy all new stuff, which the new stuff is probably going to be IoT connected. Your virtual assistant device that's next to you, is pretty connected, but are you in market to buy the next new thing, or are you going to push that device as long as you can because it comes at a cost, and why it's working good enough? And so I think the conversation needs to occur is can we get good enough service data and insights based off of what we currently have to deliver those outcomes that our customers expect, because we can't force them to buy new stuff. New stuff is going to be delayed in purchases, and so I think you need to figure out that IoT story that gets you close enough to deliver the outcomes that you're expecting. And it goes back to one other point around the conversation you're having, the expectations you're setting with customers. Maybe good enough is good enough within that new service model. And it doesn't need to be, to Sarang's point, that fully outcome-based model tomorrow. Maybe it's just, let's get a little more predictive, and the customer's willing to have that discussion with you today.
Guys, I look, and Aly, I go back to a point you made, or the quote that you had, right? The disruption is around the corner, or look, disruption is already here. And look, I'm curious for the organizations maybe on this call that we've scared a little bit, and who are in early stages of their journey, or who haven't started yet. I mean, where do you even start? Do you start with data? Do you start with process? What about technology? I mean, from my perspective, I think you first need to answer the question, why? Like, why are we even doing this? Is it to, help us differentiate? Is it to make our business more valuable? Is it to increase profitability? I think you have to figure out that why first before you, go down the path of looking at solutions or changing a process or putting sensors on all your machines so you can start capturing data. But I mean, what do you guys think? Let's provide some guidance here. Where do you even get started?
Yeah, I would start with, and we continue within IDC here. We're within our organization. We're starting to talk about value, and I think the starting point is to understand what your customers value. Do you know what that means today and what they expect tomorrow? And if you don't have a good sense of what your customers value, you're going to go back to that push conversation, which says you value 100% uptime. Maybe they don't value 100% uptime. Maybe they value seeing a technician because that gives them confidence that they have the support that they require and expect. And so I think starting with understanding your customer, understanding what they value, understanding how their businesses are evolving, because it takes away I know this is a technology call. I'm a technology analyst. I'm talking with a technology provider, but it's not always about the technology, right? I think a lot of the times it's about what do I need to deliver value to customers, and how can I evolve my business to be successful when I work with a company like Syncron or when I read a report from IDC. It's not one size fits all, and I think there's an opportunity to have that conversation around what your customers value, and then work with partners that can help you deliver on that value, the value for today and the value for tomorrow. And I think that's a starting point. If you don't understand that, you can invest in the greatest technology in the world, and it's not going to fit for your business, and you're not going to deliver the set of outcomes that your customers, will continue to buy. I always talk about, are you allowing your customer to see why they should spend more with you? I know this conversation is around service contracts. It's a discussion. It's a conversation. Justin, to your point around components and parts, you can go other places for service today. There's been a real shift to say there are third-party service providers that can do some level of service that you can do. It's not fully commoditized yet, but there is competition out there. And I think if you understand what your customers value, then you can be a step ahead of the competition when you're delivering, to those expectations and beyond.
Yeah, and I think, Aly, that last point that you brought up, one of the other items that comes to mind is the right to repair regulations as well. That's, essentially now customers will always have that option to a certain extent of where they want to go for repair. So that definitely factors into consideration as well. But no, you completely agree with that discussion around the value that the customers are looking for. What's the end state that they're looking for? And how is that relationship going to grow over time? I think taking it a step further, the customer engagement is absolutely that first part. Starting to answer your question, you mentioned something that's also important as well around data. And I think I'm going to preface this is step 2. This is like probably you got to get your baseline of where you are today as a service organization and what the uplift is to even take that first step. Most companies, as Sarang, I'll go back to the story that you had said with the filing cabinets of PDFs that were printed out. How do you take that and, all the work order records that was probably in another room that was, the cabinets up to the ceiling, basically filled out with the paperwork from the technicians and whatnot. If that's what you're working with in terms of starting, organizing that data and getting your baseline for what that cost of service is for you today, is paramount. I think you can't really offer that service contract if you don't know what the cost is going to be for your organization first, for your technicians, your engineers, your parts, the labor, whatever it may be. And so I think that's a really good place to assess the maturity, because a lot of organizations have a lot of hidden costs. We'll just say that. You may think you understand just based on the surface level work orders. And I always like to go back to kind of the breakdown between direct and indirect costs. The direct cost is, I have a technician on site for 2 hours. The technician costs X dollars per hour. They use these parts that cost this much to make. So it's very simple to kind of calculate that aspect. But what about the costs of the person that picked up the phone and took the service call originally? What about the planning of that event? What about the travel time? What about handling the parts if anything was removed in terms of like reverse logistics, restocking, repairing? So there's all these other variables that come into play with respect to building up the costs that need to be taken into consideration when you start going through this journey. I think that then goes into the conversation of where to start. Not tackling the entire end-to-end service of a particular customer, but maybe just, blocking off a small facet of what they're looking for in terms of value and then growing from there, because you need to manage the risk to your own business with also aligning it to the value that the customer is looking for. So it may not be full value tomorrow, but you want to be moving in that right direction.
Yeah, but guys, look, I'm going to ask the so what question. What if I'm an organization today that is profitable? I've got tons of customers. They all love, what we're doing. We have technicians on site every couple of weeks, and they're doing a great job. So what happens if I do nothing? What if I just sit and, let my organization continue to run for the next year, 2 years, 3 years, 5 years, right? What if I do nothing? What have you seen, from businesses that sort of sit back and say, look, I'm not going to make a change right now?
Yeah, the target continues to move, right? And so within customer service and within service, there is continuous shift. And your customers today, what quality service looks like is not going to be what it looks like in a week, 2 weeks, 6 months, a year, a decade, right? It is shifting because Justin, you alluded to a UK-based engine manufacturer, and when I talk to them, they talk about this model that they've been doing for 50 years, and they even say that we need to evolve and shift. So if you think about the gold standard, if you will, around servitization and as a service models around service, they're thinking about the fact that we can't do what we did 50 years ago because the goalposts have moved, not to use an American football analogy too much. But I think that the challenge, the urgency I continue to tell executives I talk to on the end user side is it's important to want to do quality service today, but quality service today isn't going to be what it needs to be in the future. And if you're not continuously, my background's in supply chain management and Six Sigma and continuous improvement and lean, and I think you need to continue to iterate on what good looks like. And if you're not doing it, that's not going to be good in a year, right? That's going to be what it was. That's history. And I think the evolution of what service looks like evolves based on adjacent markets. And so in your market, it may seem like this is what the standard is, but your customers are engaging with other suppliers, other markets. They're seeing that the airline industry can do this. Why can't I do it in med device? Oil and gas is doing this. Why can't you do it in construction equipment? And I think that is what is evolving the business to say there's an urgent demand to continuously improve what good looks like, because it's not just what you've done for the last 100 years that's going to be good enough in the next 10.
Yeah, I completely agree with that statement where the goalposts are moving. I'll go back to that football analogy, and using capital markets as a perfect example. You go back 5 years, what interest rates were maybe 2-ish%, somewhere around there, something like that. Inflation was 2%. Now we have inflation running anywhere between 6 to 10%, depending on where you are across the globe. Some countries much higher than that. And interest rates in the U.S. right now are 5% at the moment, the Fed funds rate. So the cost of capital is going up. That's going to change the consumer, as you said, Aly, that they're prolonging the use of their current assets. They don't want to come and buy all new equipment right now because that cost of financing has gone up significantly. And maybe the term limits have changed with what they're looking for, what they're talking to their financier with. But that model is changing. I wanted to share this story as well, because I used to work in industry and a service organization. And, in terms of staying ahead of competition, I think part of the methodology that I always took as well was, how do you think outside the box? How do you disrupt based on, and I love what you said, Aly, where you need to look at adjacent industries and understand what they're doing. And so, I'll use the example here where we were able to respond to service requests an average of like 10 hours. Essentially, it took 10 hours to respond to a service request. There's a good amount of analysis at times that was done in there. And so every year was, how do we get 5 to 10% better, 5 to 10% better? And so you're just kind of chipping away at this. But you look at some of these adjacent industries that were able to resolve some of these challenges virtually within a matter of minutes. And so when you start looking at it through the lens of, how do I asked the team, okay, great, we hit a new record, we're solving averages of 10 hours. How do I solve it in 10 minutes? And it changes your entire mentality with how you would structure basically most of the organization and processes when you really think outside the box that way. And, obviously there's pushback when it comes to that, because you're like, oh, that's impossible. We can never do that. But then you look around at other industries and they're already doing it. So that conversation is happening, whether it's at the manufacturer and that service organization, that's kind of hit or miss, but it's happening with the customers. The customers are getting smarter. They're more and more times you're seeing, I'll say, cross-industry hiring, because they're bringing in that perspective as well. And it changes the business model, changes the operating model for which they're trying to achieve their goals.
Yeah, Justin, I was talking with there's another industry expert that we work with, Dave Hart. I was talking with him a few weeks ago, and he said, the organization that's probably in the worst space is the one that's operating really well today, and they're sitting back and they're saying, look, we're happy, we're profitable, we're good to go, right? They're the organization that could flip 180 degrees, within a very short period of time. So, absolutely hear both of you when you're saying, look, change is occurring and you need to prepare for it, and you need to think about new ways of adding value to your customer. Guys, look, we've got 7 minutes left, and I was even just thinking, just going on this change path, we haven't even touched on artificial intelligence and the impact that can have to an organization. Maybe that's a discussion for a future LinkedIn Live. But as we close out our session today, and look, this has been an amazing discussion, by the way, and I think it's been really valuable for our listeners. I mean, any final words of advice for the audience here? What to think about, what's happening over the next couple of years, where to make investments. If you could tell them to prioritize one or two things, what would you say to them?
Yeah, AI, machine learning, IoT. I as a technology analyst, I sometimes struggle with the next great acronym that's going to drive business forward. I think it all is impactful, but you need to come back to what is going to deliver differentiation and value to your organizations. I continue to think, and I am biased, that service needs to be a part of the DNA of your organization. And can you think about how you're delivering service and how service is, who within your organization is going to help you drive that service outcome? Justin, you brought up a great point around the fact that, it's not just the technician that is the hero on the day, right? It's the planner, it's the dispatcher, it's, the person in, repairing parts so that we can increase the right inventory and not just have parts all over the place, right? That we can think about our entire organization as a service business. And I would argue that the big thing that companies should think about is, can we be a service organization at all? The finance team needs to think about service. The sales team needs to understand the value of service. The marketing team needs to educate customers on the value of service. Engineering and design needs to figure out how to design for serviceability and not just design great new things that break in different ways, right? And I would argue that if organizations, obviously everyone on this call loves service and we're all passionate about it, but we need to continue to evangelize within our businesses. What is the value to the customer? The value to the customer is, if something is going to break, that we will be there to ensure that it is back up and running and does not negatively impact your productivity as the end customer and your ability to deliver on your own goals around productivity and output. And I think having service across the DNA of an organization is where I would say the starting point needs to be, because, service people are great at what they do. We can put out fires all day long, but the problem is that the entire organization needs to be wrapped around delivering value to customers and all on the same page to ensure we're able to continue to level up on what we're able to do within business. Technology is great, and I love technology. I think AI is going to be transformative for our ability to be more predictive and prescriptive around service. Can we take machine data, all these inputs that say why things are failing, where they're going to fail, what's going to fail next, and predictively resolve that issue? That is going to be something that needs to be on the mind of business. But I think the building block and the foundation is are we a service business? Is service in our DNA? And then what tools and capabilities help us all get there? I think that is where I would have companies start.
Yeah, it's really about I think building that culture of service, maybe across the board. And that's hard to do at times. As I mentioned, I've worked in service organizations, and a lot of teammates just, it was transactional. It wasn't necessarily thinking about the end customer in that manner, depending on what team you were on. Even customer facing roles at times, it's still viewed as transactional. So creating that culture across the board is paramount to growing a successful service organization. And I think the area that I would start as well, and I think it more or less aligns somewhat with what Ali was saying, but Saran, you mentioned earlier with defining the why, and I always go back to one of my favorite books, Start with Why, by Simon Sinek, and
Yep.
I think that is key to driving a successful service organization. Why are you making a change? Why does the customer want this outcome? Why is the business trying to drive these margins? Why? It's a number of different areas that you need to be able to answer that why, in my opinion. And if you have a strong why defined, a lot of the other variables start falling into place. Because then you need to define, okay, well, how do I achieve that outcome then? How do I make that change? So that's, kind of my thoughts. Don't necessarily dive into, Chat GPT or trying to drive artificial intelligence over to your service organization right out the gate. I think, and, again, we're having a conversation as a technology provider too. I've seen too many times over the years where companies are mesmerized by the capabilities of maybe augmented reality or artificial intelligence and the outcomes that could potentially be achieved there. But that's a long way down the road to achieve some of those outcomes that are shown in demos. Just kind of flat out saying it as a tech provider, that journey needs to be defined and you need that partnership there. And so I think we talked about so many different aspects along that journey today that can be taken that ultimately will get you to that outcome. But having that true North Star, having that why, having that culture of service built around your organization, that's kind of that first step there. and then the other dominoes start falling into place so you can achieve some of those really, really slick outcomes with connectivity and artificial intelligence.
Guys, I wanted, we only got a minute left. I want to take one question from the audience. They're asking, what's going to be the easiest starting point for a business to assess the value of AI in service? And I know it's a complex topic. And look, from my perspective, I would say just first start by trying to understand some of this technology at the most simple level, whether that's IoT, whether that's augmented reality, artificial intelligence solutions. I mean, you've got Chat GPT out there. Go out there, mess around with it. I mean, I was with a group of friends a couple weeks ago, and one of my buddies told me he's using it to create bedtime stories for his daughter every night, like a new story every night. So just play around with it, see how it works, ask it questions. I mean, I don't know if you guys have any thoughts on this question.
We can talk about it for another hour, couldn't we? I think the easiest starting point for me is, I would argue that most of the service businesses that I talk to, they're not AI houses, right? They're not diving into the depths of AI. So I would argue it is something that should be embedded in the technology you're using. You as a manufacturer shouldn't be in the business of AI. To your point, Sarang, it should just be a part of, you go to something and it kicks out the information, the insights you need, right? It's not that you have a whole, set of resources that are doing the depths of data analytics. I think understanding what AI means for your business is the first step. Do you need full artificial intelligence, or do you need something that's, advanced analytics? I think, again, this is a conversation that can go on for a while, but I think the easiest starting point is to, define what AI means for you and your business, and work with partners that can help that be an embedded capability in the solutions you're purchasing.
The one thing I'll add on to what Aly just said was understand the limitations of it as well. And I'll bring up the example. If you work in a highly regulated environment, something like ChatGPT will present a lot of challenges with respect to meeting those regulations, because a lot of the data is very structured, needs to be reviewed, needs to be approved by official regulatory bodies at the end manner. And so, they always have those caveats. If you go to ChatGPT today, please validate these answers. It's not always correct. It's basically pulling from a lot of pieces of information there. And so that process, that journey to certify that system, that process could be more challenging depending on what organization you're in. So I think that just goes back to understanding what exactly you're looking at from an artificial intelligence or machine learning perspective, because there are so many variations of that particular technology. They'll align to different use cases and different outcomes that you're trying to achieve.
Absolutely. Well, guys, this has been a great discussion today. Hey, just one quick note. Syncron has been involved for the past 3 or 4 months in a research study where we've actually reached out to about 500 or so C-level executives, supply chain leaders, as well as service leaders. And we've created a brand new ebook that we're launching. It's called Building a Resilient Aftermarket Service Business. And it really explores different areas of building, a future-proof service organization. And, what are the different things that you need to think about as far as inventory goes, as far as, preparing for the future and building new service models. What does that mean for your service team? What does that mean for the overall business? And, it's a great research study where you can really see what your peers are thinking about and talking about, and where they're making investments. So look out for that from Syncron, launching soon. Awesome, guys. Well, again, I appreciate the